Of global events, the International Monetary Fund has cut the global growth forecast in its first prediction after Britain voted to leave the European Union. Now, here are the top 5 highlights from the IMF report. Number 1, for the first time in 2 years, India's growth forecast has seen a downgrade. India's growth estimates for FY17 now stand at 7.4% as against the earlier projection of 7.5%. Number 2, global growth forecast itself has been cut from 3.2% to 3.1%. The fund has warned of significant risks to its outlook, and the biggest risk of them all is really the Brexit. Now, IMF believes that the UK referendum could cause substantial economic and political uncertainty. In fact, the fund believes global growth outlook would have been higher if not for Brexit. Growth forecast has been cut across the board for the United States, for Britain and for Europe. Finally, it's only China which has been spared that axe. The growth forecast for that country remains unchanged at 6.2%. The fund believes that the near-term outlook for China has improved due to some policy support. Here is the chief economist at IMF raising the red flag over Brexit and its implications for the world.
The Brexit effects are going to play out over a long period of many months as the EU 27 and the UK renegotiate a new agreement. I think one is always surprised by what stock markets do, but they're also responding to other things. For example, the prospect that central banks maintain interest rates lower for longer as a result of the Brexit vote. I think based on the data we have, it's just too early to tell how this will play out. The fear is that if things go badly, if we start to see incoming more negative data than we currently expect on the UK or the EU, markets might react strongly, and we know there's the possibility of negative feedback loops there, in particular through weak banking systems. Emerging markets that are actually doing a little better, and on the whole, low-income economies, on the whole, meaning on average, doing worse. But there's a lot of diversity. For example, in the low-income group, Nigeria, South Africa weigh very heavily on that average. Conversely, in emerging markets, we see surprising positive developments, surprising from the standpoint of our last forecast.
And now the latest in the